Hello and welcome to this Rent Risk Resolve presentation on rent arrears. I'll be talking to you about the impact of arrears, the measures you can take to minimise the risk of experiencing non-payment, and what you should do if rent arrears become an issue. So, what are the risks you can face when it comes to rent arrears? Far from representing pure profit, for most landlords, rental income is used to make mortgage payments, to keep up to date with maintenance, and to cover the general cost of running a lettings business. If this is lost or reduced through arrears, you could be at risk of falling behind on your mortgage payments, which in turn could harm your credit rating and your ability to obtain affordable finance in the future. Not only that, but if your property requires maintenance throughout the period in which your tenants are struggling to make their rental payments, you could find yourself unable to pay suppliers or carry out essential work. Rental arrears can also put a strain on your workload, as you struggle to accommodate for late and underpaying tenants. Even if your tenant is responsive and able to make up the arrears swiftly, you will need to make some changes to accommodate for your loss of income, which in turn could also cause your relationship with your tenant to become unsettled. Let's first consider how big an issue rent arrears can be. According to our latest research, 32% of landlords have experienced rent arrears in the last 12 months, and with an average arrears standing at around £1,600 per tenancy, arrears can be a big deal. Without this money, many landlords will struggle to service their mortgages. Unlike almost any other type of service provider, landlords are unable to immediately terminate a contract with their customer in the event of non-payment. To protect the tenant, only a court can end a tenancy agreement on the basis of non-payment. So how can you build a buffer into your business plan to protect against rent arrears? If you can, we suggest that you budget on the basis that you may only receive 10 months' rent out of every 12. This allows you to cover the majority of unexpected costs. Of course, it's all very well building a buffer into your budget, but prevention is better than cure. Prevention starts before you even grant a tenancy. It is essential that you vet a potential tenant to check that they are in a position to meet their rental payments and have a good track record with their previous landlords. It's possible to do this yourself by requesting proof of income, an employer's reference, and a previous landlord's reference. Alternatively, you could employ a professional tenant checking service to carry out these checks. There are a variety of services on the market. The NLA offers a basic tenant check and a more detailed service, offered at a discount to NLA members. Once you have found a tenant and are confident in their suitability via the vetting process, you should think about insurance cover. Landlord insurance offers additional cover to your average home insurance policy. It covers risks such as public liability and accidental damage. Furthermore, rent guarantee insurance provides protection in the event that your tenant fails to pay the rent. The NLA offers a number of such policies. NLA Rent Protect, which is discounted by 10% for full NLA members, and NLA Property Insurance, discounted by 15% for full NLA members. Next, when you're drawing up the tenancy agreement, perhaps consider a guarantor. This is a good idea if you're uncertain about the tenant's ability to make their rental payments, which is likely to be the case with tenant groups including students and those who have poor credit scores. A guarantor can be a friend or relative of the tenant who agrees to make the rental payments if the tenant fails to do so. The guarantor should be a UK-based homeowner, and you would be wise to carry out background checks on the proposed guarantor before providing a guarantor agreement. When you are happy, be sure to issue a guarantor agreement, available to download from the NLA website, allowing plenty of time for the guarantor to read and understand what is required of them. Even if you have made every effort to prevent arrears, you'll still need to look out for the signs. because after all, everyone's circumstances can change. Try to keep in regular contact with your tenants so that they have the opportunity to tell you about any changes or reduction in their income. This allows you to discuss their plans and whether they will be able to maintain the tenancy. Also, be sure to monitor receipt of rent so you can act quickly if payment is not received. In the event that you notice a missed payment, swiftly make a polite inquiry. There may be a genuine banking error. This can easily be resolved and allows you to mention the importance of timely payment. For more serious issues, arrange to meet up with the tenant to chat through the problem as soon as possible. For problems that seem long-term, discuss support options available to your tenant and consider a reduced rent or short-term repayment plan. If these options are not going to help resolve the issue, you may want to discuss whether the tenant would like to end the tenancy early. This may be an appealing option for some tenants, but remember, landlords cannot simply end tenancies due to rent arrears without a court order, unless the tenant agrees to surrender the tenancy. For more information on this topic, visit our Rent Risk Resolve webpage and download our Arrears Guide for landlords and tenants. To contact the membership team or the advice line, please call the numbers on the screen. Thank you for listening.